Talk to us about this balance between earnings and revenue, right? Because the company is spending more and it's starting to pay off. That's one of the reasons why revenue went up. So how do you interpret how investors are weighting the earnings miss versus the increase in revenue?
This is generally a good earnings report. They not only came in line with revenue, but it's a 61% growth from last year, and so that's really what people are going to be counting on. The EPS miss is mostly due to a big valuation gain for one of their subsidiaries, one of their huge subsidiaries, Ant Financial, and so stripping that out, their earnings were pretty much in line with investor expectations and what people were kind of counting on Alibaba for. But make no mistake, Alibaba is still spending quite a bit, and that's going to take a hit for their profits.
Shelly, the stock's doing pretty well today, but it has been under some pressure recently because of concerns, macro concerns about China and its growth rate and how it's doing with trade. Do those persist? To what extent is the Alibaba stock sort of a surrogate for how China's doing?
And that's the thing that people are going to be watching right now, because as we saw last week with Tencent, which took a big hit, people are wondering, is that just Tencent, or is that going to be the greater China tech industry, and is that going to even extend over to the global tech industry? So what this report kind of shows is that, you know, things are going pretty well for Alibaba. They're continuing to have good revenue numbers, and people are continuing to buy stuff on Alibaba. What it is reflecting, though, is this kind of change of business for these companies like Alibaba and Tencent that have already conquered the online world, but what they're really doing now is trying to conquer the offline world, and that takes a lot more money.